The world once believed China would soon overtake the United States, that the 21st century would belong to the dragon, not the eagle, but suddenly the script is changing. China's factories are quieter, its housing market is sinking. Youth unemployment has reached record highs. Meanwhile, across the Pacific, the U.S. economy, the one everyone said was doomed by debt, inflation, and politics, is roaring back with unstoppable force. Tech giants are rewriting the future with AI. Investors are pouring money into American assets, and the U.S. dollar still rules the world like a king that refuses to abdicate. So what happened? Did China's miracle finally hit its limits? Or is this just a pause before a massive comeback? And is America's economic power truly reborn, or living on borrowed time? Tonight, we dive deep into the numbers, the power plays, and the secrets behind the global economic race that will define our future. Because the question isn't just who's winning right now, it's who will control the world economy for the next 50 years. The global economic landscape for decades, the global economy has been defined by one unstoppable force: China's rise. From the 1980s to the 2010s, Beijing's economic model of mass production and export dominance reshaped the world. Made in China became the planet's most common label. But as 2025 unfolds, the balance is shifting. China's once double-digit growth has cooled to around 4 to 5%. Exports have slowed, consumers are saving instead of spending, and the property sector, once a growth engine, now drags the economy down. In contrast, the United States, long predicted to decline, shows resilience. Its growth, driven by technology, innovation, and energy independence, continues to surprise global analysts. From AI to advanced manufacturing, America remains a magnet for global capital. The world economy now stands at a crossroads, one superpower struggling to sustain momentum, another rediscovering its strength. The race is not just about GDP, it's about who defines the next era of global power. Why China's engine is stalling. China's success story was built on 3 pillars: low cost, labor, export-led manufacturing, and a booming real estate market. But those pillars are cracking. The workforce is shrinking as the population ages. Labor costs have risen sharply, eroding the competitive edge that once drew global industries. The property sector, which contributed nearly 30% of China's GDP, is in crisis. Ghost cities, defaulting developers, and billions in lost savings have shaken public confidence. Add to that, a tightening political environment under Xi Jinping has made foreign investors cautious. Capital flight is rising, and FDI has fallen to multi-decade lows. The once vibrant private sector is losing ground to state control, reducing innovation. China is not collapsing, it's transforming. But the transition from an export-driven to a consumer-driven economy is proving painful. The world's second-largest economy still wields enormous power, yet the momentum that once terrified the West is clearly slowing. America's unexpected strength despite political chaos, inflation, and rising debt, the U.S. economy continues to surprise the world. Job creation remains strong, unemployment hovers near record lows, and the dollar still dominates global finance. America's real advantage lies in innovation, the ability to reinvent itself when others stagnate. From Silicon Valley's AI revolution to Wall Street's financial leadership, U.S. companies remain unmatched in global influence. Energy independence has further boosted America's resilience. With shale oil and renewable investments, the U.S. is now one of the world's top energy producers. While many nations are tightening, America continues to attract global capital. Investors still view U.S. markets as the safest bet in times of uncertainty. More importantly, the American spirit of entrepreneurship, the belief that failure is just the beginning, keeps driving growth. Against all odds, the United States isn't just surviving it, redefining global leadership for a new economic era. The technology arms race. Technology is the new battlefield of global power. China once aimed to surpass the U.S. in AI, robotics, and semiconductors by 2030, but Washington's tech restrictions, especially on advanced chips, have slowed Beijing's ambitions. While Chinese firms dominate 5G, solar panels, and electric vehicles, they still depend on U.S. technology for critical components. American giants like NVIDIA, Intel, and OpenAI continue to lead the global frontier of innovation. This isn't just about gadgets. It is about who controls the digital infrastructure of the future. Whoever leads in AI and quantum computing will dominate defense, finance, and communication. China is now investing billions to build domestic chip industries, but the gap remains wide. Meanwhile, the U.S. doubles down on innovation through public-private partnerships and education. In this race, speed and creativity matter more than size. And right now, the United States holds the upper hand, not because it's richer, but because it's faster to adapt. Geopolitics, alliances, and the dollar's power. The economic race is also a geopolitical chess game. China's Belt and Road Initiative aimed to expand its influence across Asia, Africa, and Europe. It succeeded to an extent, but debt concerns and local resistance have weakened Beijing's soft power. Meanwhile, The US has strengthened alliances with NATO, the G7, and new Indo-Pacific partners like India, Japan, and Australia. Together, they form a network of military, economic, and technological cooperation. At the heart of America's dominance lies the US dollar, the world's reserve currency. Nearly 60% of global trade still uses dollars, and central banks hold trillions in US assets. China's efforts to de-dollarize global trade or push the yuan into dominance have seen limited success. When crises strike from wars to pandemics, global money still flows into the United States. That trust, built over a century, remains America's most powerful economic weapon. The demographic divide. Demographics are destiny, and here, China faces a historic challenge. For decades, the one-child policy created an aging society. Now the population is shrinking. In 2024, China's birth rate hit its lowest point on record. A smaller workforce means slower growth, fewer consumers, and more pressure on public finances. By 2035, 1 in 4 Chinese citizens will be over 60. The economic cost of caring for this aging population will be enormous. In contrast, the U.S. maintains population stability through immigration and higher fertility rates among younger communities. This demographic advantage fuels innovation, consumption, and entrepreneurship. While China's population pyramid narrows at the base, America's remains broad and dynamic, a crucial advantage for long-term growth. China may build the factories of tomorrow, but without enough workers and consumers, the engine may not run at full speed. Demography may not decide everything, but it sets the limits of possibility. What lies ahead? The global economic race. ISNT, about who wins today, it asks about who adapts tomorrow. China's slowdown doesn't mean decline, it means reinvention. The government is pushing for green tech, domestic consumption, and AI-led self-sufficiency. The U.S., meanwhile, must face its own challenges. Rising debt, political division, and an overdependence on the dollar's dominance. The next decade will be defined by competition and coexistence, where both nations push each other to innovate faster. Regional blocs like the EU, India, and ASEAN will also play crucial roles, reshaping the world's economic balance. The future won't belong to any one nation, it will belong to those who innovate, adapt, and earn global trust. Still, as of now, the momentum, technological, financial, and demographic tilts in favor of the United States. But the story is far from over. History has a habit of surprising even the most confident superpowers. The global economic race between China and the United States is far from over. It's only entering a new chapter. China's slowdown doesn't mean decline. It's a shift toward reinvention. America's strength lies not just in money or markets, but in its unmatched ability to adapt, innovate, and lead through crisis. Both superpowers are rewriting the future, one with ambition, the other with resilience. Who wins will depend not on power alone, but on who learns faster, builds smarter, and earns the world's trust. If you found this story eye-opening, don't just stop here. Hit like, share, and subscribe to stay ahead of global change. Comment below, who do you believe will shape the next economic century, the dragon or the eagle? Because the race for global dominance isn't history, it's happening right now.